Hey everyone, and welcome to The Explainer. Look, I know why you're here. You don't want fluff, you want the facts, the hard numbers, and you want to know exactly what the 2026 VA cost of living adjustment actually means for your bottom line. Well, you're in the right place. We've got a highly structured breakdown lined up for you today that translates all these complex legislative changes into real, actionable dollars and cents. So let's just get right to work. Okay, I always like to start with the bluff, the bottom line up front. The official 2026 cost of living adjustment, or COLA, increase is exactly 2.8%. Boom. That right there is the definitive number that's going to dictate your monthly compensation for the upcoming year. All right, so here is our roadmap for today. We're looking at 1, the 2026 COLA increase, 2, your 2026 disability pay rates, 3, the differences between VA and military retirement COLA, 4, how COLA is actually calculated, 5, some recent legislative victories, and finally, 6, looking ahead to 2027. Let's dive in. Section 1, the 2026 COLA increase, securing your purchasing power. So that 2.8% bump for 2026, it's actually up slightly from the 2.5% we saw in 2025. And it applies broadly, right, across the board. VA disability compensation, TDIU, survivor benefits, special monthly compensation, and military retirement. But when do you actually see this money hit your bank account? Well, there's a little quirk in the timeline here. The effective date for the new rate is December 1st, 2025. But because the VA pays in arrears, meaning they pay for the previous month, you receive December's payment at the very end of the month. So your absolute first direct deposit showing that 2.8% raise is going to arrive on Wednesday, December 31st, 2025. And then the following payment will hit on January 30th, 2026. Section 2, your 2026 disability pay rates, the wallet impact. Okay, to keep things clean and simple, let's look at some key tier milestones. Now, this is for a single veteran with no dependents. If you're sitting at a 10% combined VA rating, your 2026 monthly payment will be exactly $180.42. Moving on up to that halfway mark, a 50% rating brings you to $1,132.90. And if you're at 100%, your baseline monthly compensation reaches $3,938.58. But listen, those numbers, they only tell part of the story. The absolutely crucial threshold you've got to remember here is 30%. Why? Because veterans who have a combined disability rating of 30% or higher are eligible for additional monthly compensation for qualifying dependents. Now, if you're at 10 or 20%, this doesn't apply to you. But the second you cross that 30% line, adding a spouse, dependent parents, or children literally changes your whole payout structure. Let's look at exactly how those dependent boosts work in the real world, and we'll use that 100% rating tier as our concrete example. As we just saw, the veteran alone receives $3,938.58. But add a spouse to the mix, and that jumps to $4,158.17. Add a spouse and one child, now your 2026 monthly payment becomes $4,318.99. It's fantastic because the structure actually scales with your household size to make sure your purchasing power is protected. Section 3, VA versus military retirement COLA. Decoding the differences.
Now, both of these benefits get a COLA increase, but the actual impact on your wallet, it varies wildly, and it all comes down to taxes. VA disability compensation is 100% tax-free, meaning you keep every single penny of that 2.8% raise. Conversely, military retirement pay is subject to federal income tax. So what does that mean? It means that while your gross retirement pay definitely gets that 2.8% bump, your net benefit, the actual cash in your hand, might be slightly reduced depending on your specific federal tax bracket.
And the math also shifts based on your specific military retirement plan. Under standard military retirement, you're going to see a $28 increase for every $1,000 of pension you receive. However, if you opted for the career status bonus, the CSB or Redux plan, your COLA increase actually drops by a full percentage point, yielding just an $18 increase per $1,000. And hey, one quick warning here. If you're someone who receives both VA and military retirement pay, just keep an eye out for those offset rules. They're designed to prevent quote-unquote double dipping, which basically means a portion of your VA disability might be deducted just to balance out the overall benefit. Section 4. How COLA is calculated. The mechanics behind the math. Okay, so this entire system is built upon one single metric, the CPIW. That stands for the Consumer Price Index for urban wage earners and clerical workers. The Department of Labor uses this to measure changes in the prices of a massive sampling of everyday goods and services. Basically, if the CPIW doesn't go up, the COLA doesn't go up. But here is the absolute best news. If inflation is zero, or even if it goes negative, your benefits stay exactly the same. They will never, ever decrease. So how does the Social Security Administration actually arrive at this magic number? Well, surprisingly, they aren't shaking a magic 8-ball over there. It's actually a very strict 3-step process. Step 1, they measure the average CPIW during the third quarter. So that's July, August, and September. Step 2, they compare that Q3 average to the Q3 average of the previous year. And step 3, the percentage difference between those two numbers becomes the official COLA rate. And honestly, that is the exact mathematical path they took to get to our 2026 rate of 2.8%.
Section 5, Recent Legislative Victories. Protecting your benefits.
Now, perhaps the most important piece of legislation regarding today's explainer is the Veterans Compensation COLA Act of 2025. This law legally mandated that the VA secretary must adjust disability compensation, dependent compensation, and clothing allowances to perfectly match the exact percentage increase applied to Social Security benefits. Think of this law as your legal shield. It's what ensures your benefits actually keep pace with inflation year after year. But the 11th, 19th Congress didn't stop there. They also secured 4 other major structural improvements for veterans. First up, the VA Home Loan Program Reform Act. This is huge because it allows delinquent borrowers to defer past due amounts without accruing additional interest, literally preventing thousands of foreclosures. Second, the Medal of Honor Act massively increased the special monthly pension for living recipients to $5,625. Third, we saw the passing of the ACES Act, which mandates a National Academy study on cancer prevalence among military air crews, which is vital for informing future toxic exposure policies. And finally, the Veteran Fraud Reimbursement Act modernized exactly how the VA restores funds to veterans who unfortunately fall victim to scams. Section 6, Looking Ahead to 2027. The Financial Horizon. Okay, I know the ink is barely even dry on the 2026 numbers, but analysts are already tracking inflation for the future. According to projections from the Senior Citizens League, which is a great bipartisan advocacy group, the COLA for 2027 is currently projected to jump up to 4.0%. I mean, that would be a really significant step up from the 2.5% we had in 2025 and the 2.8% in 2026. If this projection actually holds true, we're looking at the highest COLA increase since that massive 8.7% bump way back in 2023. Which naturally leaves us with one final big question. Will 2027 actually bring a 4% bump? Well, honestly, we won't know the official number for sure until the Social Security Administration runs its Q3 calculations next October. But it is incredibly important to start factoring these ongoing inflation trends into your long-term planning right now, because understanding the structure of your compensation, knowing exactly how dependents affect your rate, and seeing how the CPIW drives the underlying math, that is what puts you firmly in control of your financial future. Thank you so much for joining me for this explainer, and as always, keep learning.